Hello, financial enthusiasts. Welcome back to Absolute Accountant. Today, we're diving into the core elements that make up the language of business: assets, liabilities, equity, revenue, and expenses. By the end of this session, you'll have a comprehensive understanding of these fundamental components that shape financial statements. So let's roll up our sleeves and get started. Our journey begins with the ABCs of finance: assets, liabilities, equity, revenue, and expenses. These 5 elements are the building blocks of financial statements and provide a snapshot of a company's financial health. Let's kick things off with the first letter of our financial alphabet, A, for assets. Assets are the economic resources owned or controlled by a company. They can be categorized into 2 main types: current assets like cash and inventory, and non-current assets like property and equipment. Moving on to L for liabilities. Liabilities are the obligations a company owes to external parties. Like assets, liabilities can be divided into current liabilities, such as accounts payable, and non-current liabilities like long-term debt. Now let's explore E for equity. Equity represents the ownership interest in a company and is calculated as the residual interest after subtracting liabilities from assets. It includes common stock, retained earnings, and additional paid-in capital. Shifting gears to R for revenue. Revenue is the income a company earns from its primary operations. It's the top line of the income statement and includes sales, fees, and other forms of income. Revenue is recognized when goods or services are delivered. Now let's talk about E for expenses. Expenses are the costs incurred by a company to generate revenue. They can be categorized into operating expenses, such as rent and salaries, and non-operating expenses, like interest and taxes. Now that we've covered the individual elements, let's see how they come together in financial statements. The balance sheet presents a snapshot of a company's financial position, showing assets on one side and liabilities and equity on the other. The income statement showcases the company's profitability, detailing revenue at the top and expenses deducted below to arrive at net income or loss. The statement of cash flows tracks the movement of cash into and out of the business, classifying cash flows into operating, investing, and financing activities. These elements don't operate in isolation. They interact with each other. For example, net income from the income statement impacts equity, and changes in assets and liabilities affect cash flows. Let's dive into some real-world examples to see how these elements work together. Imagine a company selling a product, incurring expenses to produce it, generating revenue from sales, and dealing with assets and liabilities to keep the operations running smoothly. We'll explore case studies, looking at how companies navigate financial challenges, make strategic decisions, and communicate their financial stories through these elements. And there you have it, a comprehensive overview of assets, liabilities, equity, revenue, and expenses. These elements are the bedrock of financial literacy, allowing us to decode financial statements and understand the health and performance of a company. If you found this video insightful, don't forget to give it a thumbs up and subscribe for more educational content. This is Absolute Accountant. Until next time, stay curious.